We saw record ETF inflows in 2025, and investors are still bullish for this year, with half of ETF investors saying they could see their entire portfolio in ETFs in the next 5 years. Some are even considering pulling money from individual stocks in favor of ETFs. This is all according to a new study from Charles Schwab. And let's bring in David Botset, Schwab Asset Management Head of Innovation and Stewardship, for this week's ETF report brought to you by Invesco QQQ. Thanks so much for being here.
Thanks for having me, Julie. Great to be here.
So, David, I think we all sort of know on an anecdotal basis how popular ETFs have become. What I think is interesting about your study is just how popular and kind of what's driving it. So put some numbers around it and the enthusiasm that we are seeing around ETFs.
Yeah, I think first and foremost, you had the number on the screen. We saw in 2025 that strong investor appetite and affinity for ETFs come in the way of flows. $1.5 trillion in flows in a single year. I've been in the ETF industry for a long time. I remember when the ETF industry as a whole was only $1.5 trillion. Now we're seeing that level of flows come in a single year. We're also seeing asset managers like Schwab Asset Management meet that investor demand by bringing new and innovative products to market to really help investors meet their long-term investment objectives.
David, as somebody who's been in this industry for a while, as you just mentioned, what has been sort of the tipping point, or what has been, or maybe there have been multiple, what do you think has been the thing that has driven that popularity?
I think there are probably two or three things that really drive that popularity. One is accessibility. Investors have indicated in this study we've been doing over a decade that ETFs provide them accessibility to asset classes and easy entry points. That intraday tradability and the ability to access is really a strong point. Number two is the cost. ETF investors also indicate that ETFs allow them to help reduce the cost of their overall portfolios, and we know that reducing costs lead to better long-term outcomes. And number three is just the increase in market education and acceptance of ETFs. ETFs have been around for over 25 years. Increasingly new entrants into this market, like the millennial generation, have always had ETFs around. They've known about ETFs since they were young and have that willingness and ability to go into ETFs and a great knowledge about ETFs.
Yeah, and indeed, as you found in your survey, that millennials are the ones who are really driving this by the largest percentage here. What do you think about the role of ETFs in 401ks? We have seen some adoption in those plans, but they're still very reliant on mutual funds. When does that start to change in a more decided fashion?
It has been a barrier to ETF growth and getting into retirement plans, primarily 401ks. Now, we have to think about what the benefits of ETFs are. I just talked earlier about accessibility. Most individuals in their 401ks aren't actively trading every day. Instead, those investments come in regular distributions and income from their paychecks, which comes every week, every 2 weeks, once a month. So that tradability that ETFs provide don't necessarily mean as much in a 401k plan. What we have seen in 401k plans increasingly that's similar to the ETF market is a greater use of index products and a greater use of low-cost products in 401k plans. So that is ringing true in the way that investors allocate their 401ks in much the same way they're allocating their taxable accounts outside their 401ks using ETFs.
And then speaking of allocation, about 25% of the investors you surveyed in ETFs are going to use them for alternatives. And we've seen a real increase in products that are available to access those types of alternatives. And we're putting them up on the screen here, the types of alternatives that people are looking at here. How many more products are we going to see? How much of a growth area is this? And are there any sort of pitfalls with offering ETFs that offer people access to alts?
I think we hear about alts, and especially all the conversation in 2025 really stemmed around more traditional alternatives, lower liquidity alternatives, private credit, private equity come to mind. But when you look at the chart you have on the screen, what you see at the top of that list are more traditional alternatives of how do you think about reallocating a traditional 60-40 equity fixed income portfolio, bringing alternatives like commodities, like real estate that can provide some diversification benefit over time and in markets like we've seen most recently with things like gold and silver, perhaps outsized returns. We're also seeing from that younger generation, going back to that millennial investor, other types of alternatives, newer asset classes like cryptocurrencies, the increasing affinity that brings in an account to provide diversification benefits, we are also seeing ring true. Perhaps when you think about the pitfalls, when you think about things like private equity, private credit, we've got to make sure that the underlying securities have sufficient liquidity so that tradability of the ETF doesn't get diminished in what we're providing investors access to.
Yeah, that is really the question for those products. It's going to be an interesting couple of years on that front. David, thank you so much. Appreciate it.
Thanks so much for having me.